So going over candle by candle analysis in the mentality of market psychology. Now, like I said, market psychology, when I say that, I'm not talking about traders' psychology, which is usually what kind of gets woven into it when people say market psychology. Trader psychology is understanding you as a trader, understanding your emotions when you're getting in trades, getting out of trades, etc. Market psychology is trying to understand the underlying, what's going on underneath the markets, to lead me to believe that something is happening, or that I believe I have an edge. So there are a lot of things that go into when you're looking at market psychology, and a lot of it has to go candle by candle, and you're dissecting it as the candle's forming. Now, going backward, after the candle's already been complete, is a really good way to practice, like what we're going to be doing here in a second. But the big caveat here is you're not actually experiencing the candles forming. Because remember, like on this candle here, this has a big wick on the top. At one point, that was a very solid bull bar, right? I mean, that would have been a bull bar that looked like this. And then it closed down here. So there's a lot of stuff that you can get in terms of information from inside of the candle, how fast it's moving, and those little nuances that you're not going to get from just going candle by candle. But doing it this way, one by one by one by one, is a good way to practice to kind of get a feel for things. So keeping that in mind and looking where we are, I have the margin pushed forward, so we can't see any of the candles going forward. And all we can see is yesterday and the decision point levels that we posted in the morning brief. That's it, right? So nothing else. We opened up with a down gap, right? But it's more than just a down gap. It's an outside gap down. And why I say outside gap, this is all of yesterday, and we opened up down here. Now, even more interestingly, if we zoom out a little bit further, this could also be the potential start of an island reversal. If you're not familiar with what an island reversal is, it goes up, it gaps up and forms an island, and then gaps down and runs away. Well, we had a big rally to the upside, they gapped up, formed the island, and now we're gapping down. That's potentially very, very bearish. So that's a clue of something that might be going on. We have an outside gap down, and the first candle of the day, pretty bearish, right? That's a very bearish candle. Now, we are opening gap down, and yesterday was, I mean, it didn't do much, but it was still pretty far up there. So when we're coming into today, it's assumed that, well, I mean, sellers that were in from 2 o'clock or so, selling down, probably going to be looking to take profit on that first move. We have an outside gap down. The gap is up here at 31.18, or at least for the MES. I think the ES was 17.50 or something like that. Same difference, though. So it gives us this big area of interest right out of the gates of, hey, sellers might be looking to take profit, or they might be looking to hammer this and get greedy. We don't know yet. All we have is a gap down in the first candle. We're not at the decision point lows at 87. We're not at the settlement. We're just kind of hanging out sort of in the middle. Now, the second candle shows up, and now we're getting a little bit more confirmation. Okay, sellers probably took profit, right? It's pretty obvious to see, but we can use the heat map as further confirmation. So if we draw over those candles, right, and I just get those two, we can see that the majority of the volume came in right in the middle, right? A little bit more up here, but for the most part, there's not a whole lot going on. Big bull bar up after a bear bar. If we add these candles together, utilizing a little bit of candle math, we have the open of the bear bar here and the close of the bull bar here. That means our body is this. Our wick would be down here, and our top would be like that. Not a very convincing candle, right? There's not a whole lot about that looks pretty amazing to do much of anything. If anything, the volume is potentially confirming a range, but we only have 2 candles so far, so it might be a little bit early to tell. Some sellers may choose to sell the close of this, but there is another caveat to pay attention to. 3,100 is right in the middle. And with 3,100 in the middle, if you're scalping for 4 ticks, right, and you've got enough room above 3,100, it's probably going to be a magnet to kind of, suck it back towards that 3,100, just like 10,000 probably will today on the NASDAQ. That's kind of the idea. But aside from that, there's not a ton to do here unless you're being a little bit more on the aggressive side. Okay, so we now have an inside bear bar. After the buyers tried shoveling up through the top and breaking out of the bears, which we just kind of realized, wait a minute, this is further confirming a possible range. It's an inside bar, basically a spinning top, equal wick on top and bottom. And again, if we're utilizing candle math, we haven't really extended anywhere. We have the open here, and now the close is a little bit worse. So we're still not really gaining a whole lot of information from these first couple candles. I do like this bear bar at the top. It's nice in the sense of the context that we just talked about, but it's forcing you, if you're going to sell it, to be selling in the middle. So you've either got to sell at 98.25 and hope you're right and the market tanks away, so you'd probably have a stop above the highs at like 31.05. But, you know, that said, it's still very early, and there's not a whole lot of conviction in this. It's not giving us one way or another. Now, on the third bar, we got our answer, but the concern now is that we've got a little bit of a range. We just failed off the highs after failing off the lows on the open. This could just be a washout in the market to pop right back up into the range again, and we end up closing back up into the 97s. Again, 3100 hovering there too. The one big thing that stands out here is the fact that this is almost a giant brick, right? There's no wick on the top. There's like a one-tick wick on the bottom. It's just a brick. I mean, this is the kind of stuff you could build houses out of. There's nothing else to it. It's very decisive. And now if we add the candles together, and this is why we've been doing the candle math, because these first three didn't give us a whole lot to work with. But now look what it's giving us, right? The open to the low, the one little tick wick on the bottom, and a big wick up here. Now we've got some answers, right? It may not look like it from the way that this formed, but if you add these candles together, they create a very decisive reason why sellers could be potentially looking to go down. That's a monster bear bar, and all of the failure happened at the highs. Sellers will be looking to sell this, right? And they'll be looking to get a breakdown at least to 87. That's our first decision point support, but potentially further. And the reason I say further is because this is a huge body candle. A couple days ago on YouTube, we did a video on wide range body candles and how they form kind of hidden gaps. This is where that potential hidden gap would be forming, right? We don't have the next candle, but a lot of sellers are going to be looking to sell this for continuation down, given the way that everything is looking. And a potential objective, stop above the highs. If you're looking at an entry point, if you just sold the close of the bear bar, then you've got your targets out. You're looking for targets at 88.25, 84.25, or if you're going for 1-to-1 or 2-to-1s, those are even further down. Now we've got a little bit more context. If you haven't already had your target filled, right, this is where we can go in and we can kind of revert back to, hey, wait a minute, right? Now we've got a WRB, a wide range body gap, that's forming a potential way to measure our way down. So what we can utilize now is an arrow or the fib tool or whatever you want or whatever you want to use rather, from the top of that bear bar to the top of that next bear bar. That's what creates the gap. And then I'm going to draw down, right? My arrow goes there. My target then is going to be at 81.50. So the anticipation is that we're going to find some support at 81.50. But we are still pushing very aggressively down, and there's a chance now that there might be another one, another WRB. So you're seeing the strength really kicking up, right? The strength is going very, very aggressively. And a lot of traders might not have been convinced on this one if they weren't doing any of the candle math or anything else. But when you start seeing this, that's going to convince a lot of people. When you have 3 stacked bear bars like this and they're huge, some people are just going to sell for literally any reason. Bull bar? Okay, good enough. Sell it. Close of a bear bar? Yeah, sure. Why not? Sell that one too. You're kicking up the aggression, right? So when we go forward, we see even more, right? More candle gapping and more WRB, wide range body gapping. That's giving us more objectives. So not only do we complete this objective, but now we can hunt for another one. We've got this guy up here. Draw that down. This is still telling us that there's a potential for an open target down to about 72.50. So if you have a trailing target that you're looking for, this is how you're finding them, right? Or at least one way to find them. You're looking for a 2-to-1, 3-to-1, you get your normal trade, but then you're looking to get that little bit of icing on the cake. Look for these measured moves, right? Completion to the downside, but what did we do? We created another WRB. This is how you know you've got a lot of strength, right? When you're just stacking these candle gaps all over the place, back to back to back to back to back, you've got some strength to the downside, and here again, we have something else that we can measure. So looking for continuation to the downside would be logical to see support down at 66.75. We're staying inside, right? That's not I mean, if you're a seller and you sold way up here or way, in the middle or even down here, this isn't going to scare you, right? It's an inside bull bar that closed halfway back. Who cares, right? That's not going to prove anything. That's probably just sellers taking profit. And aggressive scalpers will look at this and say, hey, you know what? We have an inside bar, and a lot of times traders are watching these inside bars, and more often than not, traders are maybe not so good, right? 95, 96% of traders lose their accounts. That's how it works, right? Welcome to the probabilities. So what are they probably doing down here? They're probably trying to pick a bottom. Well, if they're wrong all the time and they're trying to pick a bottom down here, if I were a larger trader or someone who is looking to trade exclusively traps, what better place to find a trap than selling above the inside bull bar? Or if you think you might be able to get enough extension even above that previous bear bar's high. That's going to be the zone where a lot of trapping is going to take place, because a lot of buyers are going to get suckered into trying to catch a reversal, which at this point is like juggling chainsaws. I mean, this thing is ludicrously bearish. So that's a horrible place for buyers to come in, and sellers are going to know that. They're going to be selling into it. In all these areas, look at all the defense they've got. They've got the gap there, they've got a gap there, they've got a gap there, decision point resistance at 87. There's a lot of stuff backing them up. We go back up, run straight into the brick wall of that gap, kind of see that kind of expected. And again, like we were talking about, if you're playing the trap role, if you're a trapper, then sellers are going to be selling in the face of those buyers, knowing that it's a bad buy signal, selling above this bull bar. Conversely, you could be waiting for a bear bar to turn back down, or you could be waiting to maybe sell the bottom of the gap zone with a stop above the next one. However you want to approach it, but there is an area of resistance here that's expected to push back a little bit. The gap is still open, right? We have a double top at the bottom of that gap at 79.50, so it's still open. Nothing's changed. The objective is still down to 66.75. Or, around there, give or take, but in that area. Nice, well, the bar itself is not very nice, but it's a good bear bar back down. The problem here is that they ran into the low closes and they bounced back. Now, the low closes, this is an area after a market has formed a bounce that can sometimes become a zone of support, or more importantly, if it's a very strong trend day, an area of support that breaks and turns into resistance later. So this is an area that, although I'm not really interested in potentially looking to be a buyer, that is an area where if they can crack through it, might be able to find a sell. That would make some sense. As of right now, though, they're having some difficulty at these low closes and low opens. Low close of the bear bar, low open of the bull bar. We have failure to close underneath, one tick away from testing it. There's obviously something going on there. Now we have another bull bar, and what's it doing? It's challenging that gap. The gap has closed in a little bit now because we're breaching into that gap, right? So we have to adjust our measurement. The measurement of the gap does change like that. So now we're looking for a move back down to just below the lows, okay? And then we break through it and we fill the gap. So this gap is no longer viable to use as a measurement. So what does that mean? Well, that means that we can revert back to a larger measure. That means that we could be looking at this from an impulse leg standpoint, big giant bear bar down. Whatever it is, though, all of our gaps have been filled, either at their objectives or backfilled to fill in the gap. So we don't have anything else to measure down, which might have been a clue, given that they were taking profits down there at 70.25 and we're rallying back up. Not saying that the buyers are taking over yet, obviously. They've got a lot to prove. This could just be a bear flag down. But obviously, the sellers, at least the aggressive sellers, are out of the way. Now we might be looking for, the standard pullback sellers. They come in a little bit later in the day, 10, 10:30, then they start trying to get that swing for the rest of the day. Big bear bar down. That might be good enough. Now, remember, whenever you have this type of move, there's going to be a couple different approaches. The aggressive approach is just, bam, sell the market. It's just sell it. Get me in the trade. I don't care. But there's also the conservative, or slightly more conservative approach. This is a very bearish bar. But if you're looking at selling this on a flag breakdown, what do you expect to have from a flag, right? Breakout pullback. Try to get a better price. So although the entry signal is down here at 72, that's forcing you to sell like a point or two away from the low. You don't have room for anything to work, right? If I'm putting my stop above the highs and I'm jumping in there, I barely have enough room for a micro scalp distance, let alone anything else. So it makes it very difficult. I would much rather see, hey, maybe I can get a fill. This is potentially forming a candle gap, right? Maybe I can get a fill back so where they fill in that gap, right? Somewhere around there. Or looking previously, where was a good chunk of resistance? There was obviously some resistance here. Breakout, failed. Maybe inside that, which is right around the bottom of that candle again. So all inside there, right? This whole zone, if you were looking at the wicks, kind of in there. And if you're looking at the candle, it's about halfway back. So you fib traders got something to play with too. But we're looking inside there. You could sell all the way down here, and it'll probably work. There's nothing wrong with that. Your objective is a big measured move down. But why sell here when I can potentially get a little bit of a better price? Either way is fine. There's no wrong answer. But for me, you know me, I like trying to get as good of a price as I can at the risk of potentially missing the trade. I'm okay with that. I'd rather see if they can come back. All right, next giant bear bar down. It does look like they came back. They came up to 77, so the best fill would have been 76, 75. Guaranteed, at least. So the downswing, very aggressive bearishness back lower. And where are we probably going? We're probably going back down to 56. More sellers will start piling in here and trying to shove the market back down again. The breakout pullback already happened kind of inside the candles. You can see with that wick right there. There may be a wider one that happens a little bit later, but realistically, this ended up being nothing more than a trap. They filled in that final gap, and now they're dumping back down again. So a lot of sellers are still going to be hovering around target areas of the low closes, but if it does break through, that's where you're looking for that bigger target. What time are we at on the candle? 10:45, so we're running out of candles here, but buyers start coming back in, but given the context and the really strong leg down, it's more likely sellers taking profit. All they were able to get was a double bottom, or maybe one tick lower. That's about it. Not anticipating a whole lot of a move from this. It does look strong. So one nice thing that you might be able to get, knowing that we still have open objectives down, letting buyers trigger in here and then sell it back down into their face, right? You might be able to get a scalp if it's a good enough bear bar. That's not a good enough bear bar. That's not one that I like. There's not enough body to it. If it would have closed, man, basically if all the wick on the bottom were gone, I would like it. But when it cycled off the low closes, there's just too much there. Some sellers may take it, but I don't know. I'm not a fan of that one. And that tells you exactly what you should do. If you still want to take the trade, look for a better entry. Same thing we were just talking about over there. But selling the close of that or selling below that, it's too far down. It doesn't give you enough room. You'd be better off trying to get a better price. Yep, they pop up. They get that better price up to 70, so you would have been filled at 69.75 at the highest. And then it rotated back down to the giant bear engulfing candle. Now, from that bear engulfing candle, one of two scenarios. Is it going to continue to break down and hunt for that next decision point at 56? If so, we're probably going to find some support there. Or are we just going to kind of slowly grind our way down? One thing that the market loves to do when you start narrowing down into these decision points is that it'll front run it, and then front run it just a little bit, and then go boop, and trap it, and then run away, right? And that's where they get that physical test, or they get really close. So I'm not saying that we're putting in a bottom right now, but this is typical of what you would expect to see when a bottom is closer. Not here yet, though. You need a lot of proof before you start going counter trend. Weak bull bar, inside bar closed halfway back, doesn't prove anything. Sellers on an engulfing bear bar might not be too pumped about that, but at the same time, it's not that big of a deal. Not huge. Now bull engulfing candle after going back down and then back up again. That might shake some traders out. It's possibly a second long as well. If you're looking from the highs, right? We poked our way up to a new high. First time buyers came in, second time they come in. But realistically, you'd need another candle to be breaking above this one. So it's just not that great. Lots of candles stacking up. I just don't think that's going to scare anybody. If anything, it looks like they're trying to produce a trap. Ooh, they couldn't even get the trap. And then dumped all the way down and got 30.56. Now I can see the bid ask, so I already know what happens going from here. It goes down. So I can't. Now it's all cheating because I can see where the bid ask is. But I mean, up to that point, just dissecting those areas of interest and understanding, okay, you know, I still like the short, rather get a better price, right? Or I'd rather get a better price, right? Just kind of understanding what's going on can really, really break down just the psychology behind it, what's going on. Now, if you're looking from a trapped perspective, that's one of my favorite ways to do it. There hasn't even been a chance for buyers to get even really that much of a bounce. I mean, they had the second candle of the day that rotated down. I don't think anybody's going to buy above that. Maybe they buy there, right? So maybe buyers get stuck in that 80.75 to 81, and then it slams down on them. If the market's going to start rotating back up again, chances are that's going to be where they're going to come back to, because that's where everybody's trapped from. So around that 80 point is going to be a hot spot today. See if it comes back. So just kind of an overview on the 5-minute chart. Again, you got to delete some indicators so you can't cheat. So like the bar numbering and all that stuff. But it's a good way to practice. It's still not going to be as good as if you were just, seeing the candles form in front of you. But really, really, really good way to practice and get some, get some good time in and understanding the psychology of the markets. That's how you develop an edge. So hopefully it helped. I mean, if you have any questions about it, you can always shoot me an email. And then we can kind of cover them from there, or do another video topic on it, or another YouTube video or something. But psychology is by no means a small topic. So as far as the psychological side of things goes, that's why there's an entire course dedicated to psychology in the course material, because there's just it's such a huge topic. So if you were confused by something, don't worry, that's normal. Ask any psychologist who started doing anything dealing with psychology. It gets real confusing real fast, and you find out how little you know. But it can be a massive benefit in trying to find your edge. So even just knowing where people are stuck can be a huge edge. Definitely something to keep an eye on.